in-depth analysis of S&P 500 20-year mega-cycle chart, core logic, moving averages plus macro cycle resonance. This video deeply deciphers the S&P 500's 20-year weekly chart, integrating moving average arrangements with macroeconomic policy cycles to deliver actionable trading strategies. It reveals how moving averages serve as a macro cycle barometer and how their alignment with policy shifts can guide precise trading decisions. Moving averages, the essence of macro cycle reflection. 1. Moving average coding and cycle definition. Colored moving averages white, green, yellow, red represent different long-term cycles, 6-month, 1-year, 1.5-year, and 2-year respectively. The order and spacing of these moving averages directly reflect market trends. Bullish alignment white greater than green greater than yellow greater than red with widening gaps indicates a strong upward trend driven by macroeconomic prosperity. Bearish alignment red greater than yellow greater than green greater than white with widening gaps signals a downward trend amid macroeconomic crises. 2. Key cycle stages and practical signals 2004-2025 Now, let's switch to broadcast mode to walk through each critical cycle, clear signals, macro context, and actionable moves, one by one. First up, 2004 to 2007, the late bull market phase. Moving average status, solid bullish alignment white short-term above green, yellow, and red long-term, with gaps steadily widening. Macro backdrop. The Fed was in a rate hike cycle to fight inflation, but U.S. stocks thrived on economic prosperity and strong corporate earnings, keeping capital locked in positions. Trading signal. Hold steady, no need to overtrade. Stay invested until moving averages start crossing. Next, 2008, the financial crisis era. Moving average status. Dramatic bearish reversal, red long-term surges above all shorter cycles, with red greater than yellow, greater than green, greater than white, and gaps expanding rapidly. Macro backdrop. Crisis erupted. The Fed launched emergency rate cuts and quantitative easing, and panic selling triggered a sell-off cascade. Trading signal. Full liquidation, exit all positions immediately. Any rebound is a trap. Short selling can capture the main downtrend. Moving on to 2009 to 2015, the bull market recovery. Moving average status. From chaotic crossovers to gradual bullish alignment, with white greater than green, greater than yellow, greater than red, and gaps widening slowly. Macro backdrop. The Fed maintained sustained QE and zero interest rates, drawing capital back into the market as it bottomed and climbed. Trading signal. Build positions in batches, add on pullbacks, don't chase rallies. This is the accumulation phase of the long bull. Then, 2016 to 2020, the stable bull market. Moving average status. Rock-solid bullish alignment short-term white stays far above long-term red, forming a wide cloud band. Macro backdrop. U.S. economic recovery plus Trump tax cuts, dual driven by corporate earnings and capital inflows. Trading signal. Hold firmly, no need to adjust positions frequently. Ride the trend until macro policy shifts. Critical flashpoint. 2020, the pandemic shock. Moving average status. Short-term white plummets sharply, but long-term red remains upward, no signs of turning down. Macro backdrop. COVID-19 outbreak. The Fed cut rates to 0 plus unlimited QE, sparking a rapid market reversal. Trading signal. Full position bottom hunting. This short-term crash is a golden opportunity. Capital hasn't fled, and the long-term trend remains intact. Finally, 2021 to 2025, the new high cycle. Moving average status. Bullish alignment strengthens, with the S&P 500 hitting all-time highs. Macro backdrop. Fed rate hike cycle ends. 2026 rate cut expectations rise. U.S. economy achieves a soft landing, corporate earnings hit record highs, and the AI revolution drives tech stocks' risk appetite stays strong. Trading signal. Hold existing positions. For latecomers, add on pullbacks. The long-term trend is unbroken. 2. Resonance points, macro policy shifts, and moving average signals. The video emphasizes that every major macro policy turn corresponds to a clear moving average signal. 1. 2008 rate cut cycle. Long-term red moving average turns downward. Short-term white plummets liquidate and short to capture the main downtrend. 2. 2013 QE tapering expectations. Gaps between short-term white and long-term red narrow, reduce positions to avoid tapering panic. 3. 2020 pandemic emergency rate cut. Long-term red remains stable. Short-term white quickly recovers, full position bottom hunt for the mini reversal. 4. 2022 aggressive rate hikes. Short-term white plummets. Long-term red still rises, reduce positions but don't fully exit. Wait for bullish alignment resumption. 3. 2025 trend interpretation and trading strategy. 1. Current market status. Moving average, solid bullish alignment, white greater than green, greater than yellow, greater than red. Long-term red continues upward with no reversal signs. Macro background, Fed rate hike cycle ends. Arlo rate cut expectations. U.S. economic soft landing. Record corporate earnings. AI-driven tech rally. Stable risk appetite. 2. Actionable strategies. Holders. Maintain positions, bullish alignment remains unbroken. Watchers. Add-on pullbacks, leveraging long-term moving averages as support for long positions. Key monitor. Fed's first rate cut signal. Be wary of trend reversal if long-term moving averages cross after the cut. 4. Ultimate insights from 20-year chart. 1. Long-term moving averages equals final defense. As long as the long-term red moving average trends upward, any short-term crash is an opportunity. For example, 2008 crisis, 2020 pandemic. 2. Macro policy plus moving averages equals timing key. When the Fed hikes, cuts rates, watch if long-term moving averages turn more reliable than news headlines. 3. Cloud bandwidth equals position confidence. Wide cloud band plus bullish alignment equals hold firmly. Narrow cloud band plus crossovers equals reduce positions and wait. The 20-year chart perfectly validates that macroeconomics determines direction, moving averages determine timing. Mastering the resonance between long-term moving average arrangements and macro policies allows traders to capture major uptrends and avoid devastating downtrends in the U.S. stock market. Would you like me to refine a S&P 500 macro moving average trading checklist English version that maps key policy signals, moving average indicators, and trading actions for quick reference in real-time markets?